Hello everyone. In previous video, we have discussed about one of the important ratio in the investment or valuation analysis, that is the PE ratio, price to earning ratio. We understood about In the last video we understood about what is PE ratio, how do we analyze, and how do we use that analysis to understand whether the stock is overvalued or undervalued or it is fairly priced. In this video, we are going to go in detail about the PE ratio and understand what's its importance and usage, how do we analyze it, and what are the limitations we need to be aware of while doing the analysis. Yeah. So my request is, if you do like my videos, then please subscribe my channel or like the video. And I would request, like, if you can provide your comments so that I can understand what are the improvements I need to do. And if you like my video, please appreciate so that it will actually motivate me for making the more videos. Yeah. So let's start the video and understand about the PE ratio. So in the PE ratio, basically we have discussed last time what is the PE ratio, that is price to earning ratio. Price to earning means price divided by earning. Price divided by earning means, like, it's like current market price of the share divided by EPS. EPS is again for the one share, right? So that is the overall formula. So what do we understand from it? So although we discussed last time, but I'll just quickly summarize it. So let's say if a company is having share price as 300 and its EPS is 50, EPS is 20. Share price is 300, EPS is 20. So basically its PE ratio would be 15. So what do we understand from it? We understand that in order to earn $20, he needs to invest 300 in the company. In order to earn $20, because this is also per share, this is also per share. So in order to earn $20, he needs to invest $300. So basically, in order to earn $1, he needs to invest $15. In order to earn $1, he needs to invest $15 in a company, in this company. And based on that, we analyze, compare with the other company or compare with the industry to know whether it is overvalued and undervalued, right? So that what we have, and we have seen this and understood this in detail in my last video. So if you want to get more details, I recommend you watch my earlier video about the PE ratio. So let's come to this topic. So first we will understand what are the usage and importance. What are the usage and importance of PE ratio? And one of the very important usage is to understand the valuation. So whether the stock is overpriced, underpriced, or fairly priced. To understand the valuation of the stock price, like to understand whether stock is overpriced or underpriced, to have that valuation, this PE ratio is used. So what we understood basically, like, if the PE ratio is higher, than the industry average, so it means that stock is overvalued. That means that stock is overvalued. If the PE ratio is lower, that means that stock is undervalued. So actually there are two types of conclusion you can draw. If P ratio is higher, one conclusion can be that stock is overvalued, or market believes that the earning potential of that company or earning growth of that company is going to be higher. Earning growth would be higher. So two interpretation can be drawn. One is like either stock is overvalued or earning growth is higher. Why are we saying that the earning growth potential may be higher? Because this is the current market price. This is the current market price of the company. So it means in order to earn $1, investors are ready to pay $15. In order to earn $1 from that company, investors are ready to pay $15. So if the industry PE is 10, like for $1, investors usually are ready to pay $10, but in this case they are ready to pay $15. So why so? Why they are ready to pay $15? Maybe the company is a very good company and in future their growth potentials are very higher. So that's why they are ready to pay. So as I said, there can be two conclusions drawn from it. So either the company earning growth is very good, earning potentials are very good, so that's why they are ready to pay the premium. If that is not the case, then certainly the stock is overvalued. That somehow the market price is higher, but it shouldn't be like that. So two conclusion can be drawn. Similarly, in this case, either the stock is undervalued, or market believes that the earning potential or earning growth potential for that company is not so good. So that's why the P ratio is low. So this conclusion can be drawn. Now again, this part is very detailed discussed in my last video. So I recommend you can go and watch this video because before you proceed with the rest of the video. Yeah. So for this valuation analysis, whether stock is overvalued, undervalued, or fairly priced, this PE ratio is used. Okay. Second, this PE ratio is used for comparison. Now that once you calculate the PE ratio, what you are going to do? You are going to compare it, right? Because standalone that PE ratio doesn't show anything, or doesn't you cannot draw conclusion unless you compare it with the peers P ratio, or you compare with the industry. So that comparison purposes this is used. Third is for growth. So there are type of investors. So for investors perspective also this is important, because there are basically two types of investor. One is like growth investors, and other types are like value investors. Growth investors are those investors who tend to invest in the growth company, who are having higher growth potential, who invest in the higher growth potential company. So, and generally the companies which are having higher growth potentials, okay, for future the growth potential higher, will be having high PE. So they invest in the high PE company generally which have high growth potential. And value investors are generally invest for like they don't take much of the risk. So since they don't take much of the risk, so they tend to invest in a company which are having consistent growth and all, right? So generally those companies are having like low PE than the others. So they tend to invest in the lower PE companies. They try to identify undervalued stock. Again, undervalued, it's not like that if the stock is undervalued you need to invest, right? And it doesn't mean that the stock is overvalued so you need to like don't invest or something like that. You need to draw proper conclusion, you need to do the proper analysis. So again, just because P is low it doesn't mean that you have to invest, okay? Or you need to consider other factor also why it is undervalued. If its earning potentials are good, if the fundamentals are good, and even then the P is less, then yes, it may be considered undervalued stock and it is a good investment. But if the P ratio is good, because like the fundamentals are not good or earning potentials are very low, that's why the P is low, then you will not even consider it undervalued. That is not even worth investing, right? So all these things you need to consider, right? So investor, if it is growth or value investor, growth investor invest in high P, value investor generally they invest in the lower P. Yeah. Then fourth point is uh, market sentiment. Yeah, market sentiment. So looking at the P ratio, you will understand the market sentiment towards the stock. Towards the stock, you can understand the market sentiment towards the stock or the share. How? Like in this case, the example I have given, right? The industry average is 10. Industry average P is 10. But in this case, market is ready to pay 15. Like for against $1 in the company they are ready to pay 15. It means market believes that this company is having good earning potential, market believes that this company is having good earning potential, right? So we can understand the market sentiment for this company is positive, that's why people are ready to pay more premium, right? So you will understand the market sentiment. So that is the basically the usage and importance of the PE ratio. Major thing is valuation, understanding the valuation. Now let's understand how to analyze it. Now let's understand how to analyze, or what are the things we need to consider by analyzing the PE ratio. First is industry. As I said, like whether it's a P ratio or any other ratio, right? You cannot do a standalone analysis. You need to compare it with the peers of the industry to know, and then you can draw the conclusion. Similar in case of P ratio also, you need to compare it with the industry average or the peer. Then only you can draw a conclusion whether stock is overvalued, undervalued, or fairly valued. Okay, so this is something you need to consider while doing the analysis. The second point is you need to check the historical PE or trend or anything. Again, any financial ratio, two things always you need to remember. While you do the analysis, you need to compare with the peers or the industry to know. And second is you need to do a trend analysis, or you need to check the historical data how it is. Because looking at just 1 year's data or 1 quarter data will not give you any picture. You need to see the industries, market, you need to see the trend of the same company, right? How the historical PE is there, and based on that you can draw the conclusion. Third is the growth estimations, growth estimation or potential. Okay, and that is again an important point, because when I was telling in the previous, before I like erased it, I was showing, right, if the P is higher, if P is higher, then you cannot just draw the conclusion that it is overvalued. You need to see why it is higher. What is the reason it is higher? Is it like the growth potentials are good? If the growth potential or earning potential are good, then it may be good for the company. So if it is, the P ratio is higher, but if the growth potentials are good, then we can draw a conclusion that it's always not the case that it will be overvalued, because if the future we are expecting good earning, then it's okay to pay the premium now, right? So basically, when you analyze the PE ratio, at the time to draw the conclusion whether it is overvalued or no, you need to consider the growth estimate or growth potential also. Yeah, based on that only you can decide whether it is overvalued or not overvalued, or whether it is undervalued. Okay, fourth point you need to consider is the earning stability. Stability, or yeah, earning stability basically. Like earning should be stable. It shouldn't be like when you are analyzing the PE, at that year the earning was very good, right? Or earning was very bad. In that year, like earning, or that year or that quarter earning was very good or very bad, and based on that you are drawing the conclusion. You need to see how stable the earnings are. Okay, that's why we tend to like look at the trend. So you need to check how, whether earnings are stable or not. Based on that you have to draw the conclusion. Then fifth is the market trend. Market trend also you need to see, because see what happens if the market is in bull run. If market is in bull run, then most of the company stocks market price are higher. Okay, so if the market price is higher, then obviously the PE ratio would be higher. Or if the market is bearish, if the market is bearish, the market price, the stock price of most of the shares will go down. So if the share price goes down, the PE will go down, right? So while you analyze a PE or draw a conclusion, right, you need to consider what's the market trend, whether it's bullish or bearish, because that market trend will have an impact on the company's stock price, and that price will have impact on the PE ratio. So you, while analyzing it, you need to consider this also. So when you analyze a PE overall, consider the industry, consider the peers, check the historical trend of the company, check the growth estimation, what are the growth potential of that company, check the earnings stability, whether earnings are stable and the quality is good, and the market trend, what are the market trend. Consider all these factors before drawing any conclusion from PE. Yeah, so this is about the how to analyze. Now let's understand, I mean basically I have covered here how to analyze, and like what are things to consider while analysis, right? Now we will see what are the limitations. What are the limitations of the PE ratio? So first is like growth estimates, yeah, potential, estimation or potential. See, when we calculate a PE ratio, we identify, okay, against $1, I have to pay $15, right? And then we understand whether it is okay or not okay, right? Whether it is okay or not okay, then we'll see, okay, the company is a good company, he will have a good growth potential, right? That's why it is justified to pay this much premium. So we consider that. So while drawing the conclusion from the PE ratio, we look at the growth factors. Okay, that maybe the earning potential or earning growth is good, that's why it is justified to pay. But in the formula itself, we don't consider any growth. There's no growth element considered. While analyzing or while drawing the conclusion, we consider, but there is no adjustment for growth. Since there is no adjustment of growth, so sometimes it's difficult to analyze. So in order to like overcome this limitation, there is another ratio that has been derived, that is price earning to growth ratio. So there is a growth element also involved, and based on that, we can get a better estimate about the overvaluation or undervaluation of a stock. But in this specific formula, there is no consideration of growth. Since there is a no consideration of growth, so it doesn't give the right picture. So we just need to rely on our understanding, okay, growth potentials are growth, then the PE ratio is justified or not justified, right? So there's another formula drawn which considers the growth factor, and this may be the PEG, price earning to growth ratio, will be a better ratio to draw a conclusion. So that is one thing, growth. Now the second thing is the market trend. PE ratio fluctuate, comes up, goes down based on the market trend. So that is again a limitation. You need to consider the market trend before you analyze it, right? So if market trend is up, PE will be higher. If market trend is down, PE will be low. So those need to be considered. Yeah. Again, the third is when you calculate the PE ratio. When you calculate the PE ratio, we just rely on the price and earning, right? So there is no consideration of cash flow, right? Because what we are taking the earning, and earning, how it is derived, earning is derived from the accounting profit, which is based on the accrual basis, right? So it is all depends on the accrual basis of accounting. There is no cash impact here, or there is no cash flow consideration. So as I said, sometimes what happens is the company's earnings are good, but company is not able to convert those earnings into cash. It means they are selling well, they are earning good profit, but they are not able to realize or collect their account receivable. Since they are not able to realize their account receivable, they may face a cash crunch. So even though earning may be good currently, in the long run, company may face the financial difficulty because they are having a cash crunch, right? So those cash flow related elements are not covered. So you cannot draw overall conclusion from this PE ratio. Anyway, like the thing is, any financial ratio you cannot draw overall conclusion. That's why there are so many ratios. But since we have to tell the limitation, so that is one of the limitation. Similarly, it does not tell anything about the debt. There is no consideration of debt. Company may be earning well, okay, the price may be higher, but company also will be having a lot of debt in the balance sheet, right? So that is also not considered here. Then another thing is earning manipulation. Earning manipulation. So thing is, like, one of the element of the PE ratio is earning. Now as I said, how earning is derived, earning is derived from the profit and loss statement. Okay, earning is derived from the profit and loss statement, right? And that earning derived from the profit and loss statement, that is depends on the accounting policies. So earning calculation happens based on the accounting policies and practices, right? Because that works on the accrual basis. The profit and loss, all the calculation happens on the accrual basis, and all are basically based on the accounting policies of the company. Now some of the accounting policy company may change, like the depreciation method, what kind of depreciation they need to adopt, or if sometime some kind of expenses they defer it, sometimes they capitalize some expenses, or when to capitalize it, when to show in the P&L, those kind of things company decide. Okay, so there are always a chance of a manipulation in the earning. So that is something also need to be aware of and consider. Okay. Now, one of the limitation of the P ratio is you cannot compare it across the industries. You cannot compare it across the industry. P ratio you can compare within the same industry across the like multiple peers if there are, but you not compare it across the industries. Yeah, so that is again a limitation. But overall, if we see, one of the major limitation is like the growth estimate. There is no consideration of growth potential here. There is some just we while analysis we consider, but there is nothing included in the formula. So there is a new formula that is derived. We are going to discuss this in our next videos. Market trend has lot of impact on the PE ratio that need to be considered. We cannot draw any conclusion about the cash flow or debt because that is not considered anywhere. Earning manipulation chances are there because it is all depends on the accounting profit, and there are some accounting policy which company may change, or like based on the practices, the different company may have the different practices for accounting, right? So there's a chance of earning manipulation, and cross industry it cannot be done. Okay, so I hope from this video you have got the overall understanding about the PE ratio, its importance, usage, analysis, and the limitation. So if you I hope from the last video you got the overall understanding, but if you have any question, please drop a comment. I'll be happy to answer. And if you like my content, my videos, so please then press the subscribe button and the like button. And in the next video we'll discuss about the price earning to growth ratio. Also we'll discuss about the concept like the trailing PE and the forward PE. Yeah, so that's it. Thank you. See you in the next video. Bye bye.